And good afternoon, everyone, and welcome to the second event of the Ireland-Portugal Business Network Investments and Hiring in Portugal series. Let me start by thanking you for attending the event today, and also to thank A. Green and Dancer, our executive partners, for promoting and sponsoring the series. And as always, to the Irish Embassy in Lisbon and the Department for Foreign Affairs and Trade of Ireland for the continuous support in every stage of our operation. During this series, we set our sights on increasing the understanding around the Portuguese innovation scene and on encouraging business opportunities in the tech sector, especially between Portugal and Ireland. We kicked off this morning with a great chat between Aoife Healy, IPBN's chairman, and Miguel Fontes, CEO of Startup Lisboa. It was the perfect introduction to the series, and it gave us a glimpse of the tremendous potential of partnerships between Portuguese and Irish companies. The series will come to an end on Friday, April 30, with a conversation between Diogo Cruz, project director at Invest Lisboa, and Pedro Henriques, founder and CEO of Bridge Inn. They will cover subjects such as tapping into cross-border talent pools, the spike in tech hub job posting in Ireland and Portugal, among other issues. Now, during this afternoon session, we will talk about the Portuguese innovation scene with a special focus on venture capital. Over the past 5 years, Portugal has climbed the European Innovation Scoreboard, which ranks EU member states' research and innovation performance. Last year, Portugal joined the second highest grouping alongside Germany, France, and Ireland. Not only that, but with companies such as Farfetch, OutSystems, Talkdesk, Feedzai, and Embabel, among others, growing to become unicorns and highly successful at a global stage, the European tech scene's spotlights start shining for Portugal. While the ecosystem is small and still fairly immature, the talent pool is high and investors are becoming increasingly interested in this small country on the southwestern edge of Europe. So during the next 60 minutes, we will explore this ecosystem and we aim to address 3 key topics. In the first place, we will talk about investing in Portugal and Southern Europe, in the Southern Europe unique value proposition. Secondly, we will try to understand where is the investment in Portugal leading to. And finally, we will talk about the hotspots in a post-COVID economic rebound. This discussion is open to our audience, and I encourage you to ask questions on the chat. Your participation is really important for an interesting discussion, and so don't be afraid to share your thoughts. My name is Mario. I'm a board member for the Ireland-Portugal Business Network and co-founder of Pink Room, a software development studio that empowers companies all around the world by helping them accelerate and improve the development of digital products for mobile platforms. While Pink Room is a bootstrapped company, which basically means we haven't looked out for investment, our clients are often startups and scale-ups going through incubation and acceleration programs or funded by business angels and venture capital. And so, to explore the investment landscape in Portugal, we have with us Alexandre Barbosa, founder and managing partner at Faber Ventures, a distinguished Portuguese early-stage VC firm that invests in founders and global software companies with a special focus on B2B data-driven startups. Alexandre has over 20 years of experience in innovation and business growth. In his previous experiences as a technology business entrepreneur, executive manager, and strategic consultant, he was co-founder and CEO of Innovagency Group, CEO of Atlantico and Blue Tickets, and associate at Oliver Wyman. He was also vice president for the Portuguese Digital Economy Association, and a startup mentor at Seedcamp, Techstars, and Startup, just to name a few. Welcome, Alexandre, and thank you very much for joining us today.
Well, thank you, Mario, and thank you for the network. Thank you for having me today. It's a pleasure, and I'll try to make my best to be up to the standards of Miguel Fontes this morning. So hopefully we'll have an interesting forum here to explore venture capital in Southern Europe. Thank you.
I'm sure we will. You're welcome. So, Alexandre, it has been 8 years since Faber's first investment. What has changed since then?
Well, I think a lot has been changing in the ecosystem over the last 8 years. I mean, if we briefly review what was happening back in 2012 and 2013 in the region, The first incubators, first accelerators, first business angel vehicles were starting to pop up. I think the last generation of entrepreneurs and promising startups that we're now seeing at the surface of the ecosystem were being seeded at that point. And on the capital side, a lot has fundamentally changed because most of the available capital was on the public side. And so I think the ecosystem as we know it was in its early days. After a decade or so of entrepreneurship with systems integrators, sort of technology companies, which were and still remain mostly services, professional services firms. I think the last decade has seen product-led startups to surface from the ecosystem. And I think over the last few years, I think the most structural change that we've seen in the market is how aware the entrepreneurs are of what it takes to build a world-class company. And so that is obviously changing how both founders and investors and ecosystem stakeholders work together. As I think everyone is aware, the country and Iberia as at large has grown in exposure to the larger scene of European venture capital.
And if I got it right, your goal is to become a reference as one of the main operators of venture capital in the south of Europe, right?
That's correct. I mean, I think it goes back to our roots and to our DNA. I mean, you have different types of operators in the venture capital industry. Our background as a team is not, we don't come from investment banking. We're not ex-hedge fund managers, or we don't come from asset or wealth management. Our background is technology companies. And so as every entrepreneur, we do pursue our own mission, our own long-term vision. And what drove us to actually starting Faber in the market was a clear gap in Southern Europe for sort of a US style, fully independent, agile team that would work alongside founders, not only writing checks, but also adding value and increasing the likelihood of a company succeeding in the early stages of its life cycle. And so we saw that gap across Europe. We continue to see that gap, and so we'll dive deeper into this topic. I'm guessing later in our chat. And so we indeed pursue a long-term vision of building a benchmark, small-scale, specialized VC firm. We know it takes 15, 20 years to build such a credible goodwill around a certain business, and we're also alongside the ecosystem also in our first years of activity. We started, as you correctly mentioned, back in 2013 with our first investments. We've dedicated the first approximately 5 years with our first sort of proof of concept vehicle, building our initial track records, building our initial portfolio, out of which there are clearly sort of breakout companies that are to some extent the reflection of what the ecosystem has seeded over the last decade. We were first investor locally in Unbabel, a company applying deep learning and artificial intelligence to machine translation and combining with human translation to the translation industry. We were the first local investor in Seeders, a well-known equity crowdfunding platform based in the UK. Early investor in Codacy, offering an automated code review as a developer platform to the developer industry. And so some of those companies actually pushed us to the second step in building a long-term reputable firm. And so last November, we completed the first close of our new fund, which, as you indicate, it's fully focused on artificial intelligence and machine learning first and data-driven startups. We believe the future in terms of digital transformation across industries will very much be driven by such emerging technologies around data across the data stack, if you will, in the enterprise world. We see a lot of opportunity across Europe, and we firmly believe Southern Europe has a relevant role to be played in the broader European scene. And so it's the time to consolidate our role as a specialized. I think we're probably the most specialized venture capital operator in Iberia.
Perfect. With that in mind, why the Southern Europe unique? Why the south of Europe? What is the Southern Europe unique value proposition?
Well, I think that the answer to that question, I think, is a reflection of what happens across Europe. I mean, if you look at how the dynamics of cross-border innovation and investment actually has been evolving over time in Europe, shows us that talent flows from anywhere across Europe to multiple hubs. There are historically 3-4 main hubs which have outgrown the rest of Europe in maturity, in concentration of capital, and so which have been producing the first sort of larger chunk of successful case studies from Europe. And that's obviously the axis from London to Paris and then Berlin and Stockholm. But what you see more recently is that emerging ecosystems such as, be it Southern Europe or Eastern Europe, have been showing that there's a lot of talent also starting very promising, or actually already successful companies from those ecosystems. And so talent is one key driver. The other key driver is a matter of mindset and DNA. So I think there's a misconception around the political boundaries of countries in Europe, and especially when you look at Portugal, such a tiny country. I think clearly in the venture scene, the opportunity and the potential clearly outgrows the geographical boundaries of the country. I would consider Portugal from a venture capital perspective and from an entrepreneurship perspective more of a gateway of talent and capital rather than a native local closed market. And so what happens with university exchange programs, what happens with first time, second time, third time entrepreneurs, investors, we have a significant number, just out of curiosity, a significant number of entrepreneurs and investors from across Europe, investing across Europe, but actually living in Portugal. And I think part of the explanation is how easily talent has been flowing from across Europe down south. The other thing is from a technical perspective, and for us, it's again, I have to stress our lens, our point of view is towards highly technical or with technology depth types of companies and startups. And in those fields, there's plenty of talent in terms of academia level, research groups, and entrepreneurs willing to launch a company from Southern Europe. Then there's obviously a matter of economics. I mean, B2B software companies launched from Eastern Europe or from Southern Europe are clearly more capital efficient. It's not only a factor or indexed to lower costs, it's also a matter of mindsets. So you can easily leverage lower operating costs and longer runways. You can keep to some extent your talent and your teams below radar in terms of competitive poaching and hiring across startups, which is very different from Silicon Valley or even from London or Berlin. And then due to the tiny size of our local addressable markets, entrepreneurs starting from Iberia, and especially starting from Portugal, they have global ambitions from day one. So we don't know any entrepreneurs who we've been working with over the recent years that do not think globally from the outset. And so the typical structure of an early stage startup started from Portugal is typically having sort of local engineering, technology, operations teams, and then front office in larger markets such as the US or the UK. So with that in mind, and as a thesis, obviously the mandates that venture capital firms have is to actually find promising opportunities and talented people that can bring promising companies and promising startups to a venture scale of becoming global champions in a particular segment or in a particular industry. And for that to happen, you actually need to scale up very fast in the early years of a life cycle of a company. And our belief, obviously, we're biased as originally Portuguese, but we do look at the region across Portugal and in the main hubs in Spain as a region which blends all these ingredients together. And those are sort of the perfect playing field to experiment and start a company in the early days.
Perfect. So you've tapped a little bit into this about the importance of the ecosystem, but can you give us an example of a company where, for instance, the university was crucial especially in an early stage?
Okay, there's multiple examples in Portugal, not only in Portugal, of companies where, regardless of being formal spin-offs from university or not, clearly have leveraged some initial research, some sort of thesis, some product work that has been done by the team at academia level, and then leveraged and packaged as a company to form an initial startup. That has happened historically over the years. It's becoming more and more frequent. I think there's a closer collaboration, and there's an increasing role of the main technical universities in the region to be played in the entrepreneurial scene. And in our own portfolios, we have multiple examples. I mean, more recently, we've invested in companies such as Emotai, for example, clearly working in the neuroscience space with neurotechnologies, and data fusion. And that's clearly the work that has been started at university within their PhDs. We have, I mean, all of our recent investments have highly qualified specialists within the founding teams, namely PhDs, PhD co-founders. But even years ago, when we first invested in Codacy is also a good example of a company that is the continuum of an original work done at university by Jaime, the co-founder and CEO of the company. And Babel is the product of years of research done by the co-founders at university first, and then also at Google, in applying natural language process technology and deep learning to translation. And so I think that trends that we've been seeing is not only a matter of the work done at academia per se. I think it's the abstract point of view is the region has a significant concentration of highly technical, educated people. I think the region is also a magnet for talent from across Europe to move to Portugal or to Spain, continue their research work, or apply their research work to working in a particular company, namely in startups. Some of these people will eventually go back to their countries, but some of those, life happens, and some of those, for multiple reasons, will stay longer than planned. And as entrepreneurship becomes mainstream, the likelihood of these talented and highly qualified people have some sort of cross paths with entrepreneurial projects is growing over time. And so they may start working for a startup. They may actually take their research work and experiment launching a company. And that is obviously, it's all about deal flow, and that's opportunity for investors. And although the trend is that whatever the nationality of the founding teams, when you launch a company from Iberia, at least if you're aiming to build sort of a venture style type of growth for your company, then you will likely start tapping into larger markets and scaling out of Iberia commercially and as an organization in the early days. And that's where the importance of having local partners as early investors comes to play. So you will always have back-end operations, you will always have engineering teams, and you will always need trusted partners to back you during the early years of the growth of your company. And that's why it's also important to have a solid and professional class of venture capital operators in Iberia.
Perfect. So we've been talking about Iberia and in Portugal, but usually when we talk about Portugal, we always focus on Lisbon. And I'd like to ask you about the other key startup cities in Portugal, like Porto, Braga, Aveiro, and Coimbra. And how do investors look at those smaller ecosystems?
Well, I have to say, and Warren, as a heads up, we're total fans of all of those hubs that you mentioned. I can share with you that our last, I think, 5 investments were formally outside of Lisbon. We have a lot of work going on in Porto, companies there, and in Coimbra we have people from Aveiro. We have a close relationship to Braga also. So we're absolutely open to investing, and we're actually full supporters of a sort of spread ecosystem across the country. If you put things into perspective, Lisbon is, I mean, all our cities are small vis-a-vis other European hubs. So if you zoom out and look at Europe as a network of hubs, Portugal can become a single hub, very, very strong. So if you concentrate all the potential of the cities across the country, it's actually a very strong hub as a whole, the whole country. And so we see the different types of DNAs of founders. We love to work with people from Porto and teams starting from Porto. There's great technical talents at universities in Porto, great accelerators and incubators, so like UPTEC, Startup Braga in Braga, IPBN. So there's a lot of infrastructure already in place to allow for the best founders to actually leverage the country to start successfully, provided that they choose wisely when they look at the investors and partners to work with in the early days. Because founders, I think now more than ever, understand that they have to optimize for success. So they have to choose not only who writes the bigger check, but who actually has some level of expertise in their areas of work to help them and amplify their skills so that they can then start growing companies out of the country.
Perfect. Now, I'd like to talk just a little bit about the government measures that help fulfill that vision. For instance, the 200M fund. Can you shed some light on this topic and how these government measures help make that vision come true?
Well, I think the policy is there to help build markets, right? And in our case, I think this is true for the whole of Europe. All countries in Europe have their local programs, local policies, and local incentives at different scales and with different types. And I think that's indexed obviously to the maturity of each hub. But in Portugal over the last decade, I think the efforts, broadly speaking, has been to attract the private sector to getting involved and getting exposure to the venture scene and to entrepreneurship. I think that is now easier than ever. I think we've never lived a period as rich as the one we're living today in terms of different types of private sector entities looking to find their place in the venture scene or entrepreneurial scene in Portugal. The public measures have been trying to incentivize that participation from the private side. That happens at fund level with programs to incentivize private institutional investors to also invest in venture capital funds so that you can have operators like ourselves and like a couple of others in the market to fuel the early growth of such startups. Instruments like the 200M are designed to as co-investment schemes for investors both locally and internationally to have an additional incentive to syndicate and participate in funding rounds of local startups. I think more measures will follow. I think as we've seen in more mature countries, that is the case, be it with fiscal or tax break incentives for reinvesting in startups and in the asset class, be it with more founder-friendly policies around stock options or hiring, and I think that's on its way. I think the recent news about the European Startup Nation measures to have sort of best-in-class standards in different fields to incentivize the progress of the European scene in terms of entrepreneurship is a crucial step towards a more friendly landscape for founders. I think on the investor side, public capital and market making on the public side is relevant. Obviously, as soon as the private sector takes over, then public measures are less required. But we're still in the early days. So I think the public measures and even the recent programs at fund level, like Portugal Tech from Banco de Fomento together with European Investment Funds, I think those are really, really important to also in the longer term, patiently build up the institutional class of limited partners who actually are the entities, institutions investing in funds so that there's also the financial resources to be deployed and to back the entrepreneurial spirit of the local talent.
Perfect. Something we've noticed especially since the COVID outbreak began, is that the importance of geographic proximity is on steep decline. We've discussed this before. Huge companies are being built without even meeting their early customers. Zoom, Slack, broadcasting platforms like Twitter allow you to get yourself out there without ever leaving your room. And this event is just another example of that. And so while the tiny internal market was an obstacle for Portuguese and even Irish companies in the past decade, it may be an advantage for the next generation. Our companies are condemned to export if they want to grow, and this means they must think international from day one. And my question to you, Alexandre, is to foreign investors, does this differentiator overcomes the small market disadvantage?
I think we're evolving as societies and also in terms of economic business models across different industries, and forming new companies has always been a challenging task for those who dare. I think that whatever you want to call the new normal has accelerated trends that were already starting to signal some of the reality that we lived in the startup world. What you now see more frequently with distributed teams, the ease of recruiting and hiring from across the world to anywhere in the world, the willingness of both buyers and sellers to transact over video calls, and the scale and the efficiency in terms of communication that implies are only a reflection, or have just been accelerated by the pandemic and what that caused across around the world. I think I'm a firm believer in the interaction between people. When you start a small company and you actually have a team of 3-4 founders plus 3-4 additional team members, it's easy to understand how flexible the current reality is for such a team, because you can actually work remote. You don't need an office space. You can be in Portugal or wherever, and so it only makes it more extreme and more acceptable to start from anywhere, and that only enhances the relevance of emerging ecosystems such as Portugal, because now you can actually surface more rapidly whatever talent there is, and that's whoever is willing to start companies or work for emerging companies. Then the other thing is, as you grow, you have to build multiple building blocks of your company, and one crucial pillar is culture. It is a daunting task to actually consolidate a firm culture fully reliant on a distributed organization. It's very difficult. There are a few companies that have been successfully growing over time with distributed organizations. As of today, maybe I'll change my mind over the coming months and years, but I think this recent, the last year, and the remote work trends, I think leads me to believe that the sweet spot may be a blend of both. So I think you may continue to see sort of office spaces with less people on the ground, but you will still need people to interact, to spontaneously brainstorm. You need a little bit of business serendipity as you collaborate and work together. However, you will be able to leverage remote work as an accelerator of scaling up. And that is facilitating sort of scale up operations, because now you don't really need to go through the full mandatory process of flipping a company over to the US, or actually setting up shop in a larger market to experiment with customer development. That was already the case. The only change, which is fundamentally relevant, is that your counterparts, your potential customers, are now also used to working remotely. But I think we'll see different waves, right? I mean, once we get the pandemics under control on a world scale, I think we'll go slightly back to what we had before. I mean, people will want to have face-to-face interaction. But I think maybe we will stabilize on a new plateau of a successful blend between the two frameworks.
As the Portuguese ecosystem grows, we got attention from international investors. How does Faber look at those international investors? And do you see them as competitors, or do they present partnership opportunities that you can leverage to co-invest?
Well, I think it really depends on the stage of investment. So we as investors, our first investment is typically what we call as pre-Series A. That means pre-seed, seed rounds, or late seeds, usually during the first 2-3 years of life of a startup. And so at that stage, we typically compete with other seed funds or other early stage funds. But our philosophy is of full syndication. So we prefer to lead financing rounds in startups. We always try to lead or co-lead, but we always have open syndication processes. So I can tell you as of today, we're leading 3 new rounds of financing, and we're actively working with the founding teams in bringing different types of complementary investors to ourselves. Some of those are actually investors we sometimes compete with, but there's also a lot of collaboration and a lot of deal flow sharing on a cross-border basis. Then we also have sort of a year mark of our funds reserved for what is called follow-on rounds. That means to double down on the best performing companies as they raise further funding over time. And so that allows us to continue to participate in those rounds alongside new investors. And with later stage investors, say Series B or Series C investors, there's no competition. And so there's even a closer collaboration in terms of deal flow sharing and so on. They are looking to having regional operators that serve as feeder funds to actually share deal flow with them in those subsequent rounds of funding. In our case, we want to successfully attract further later stage investors to our portfolio companies. So there's a lot of competition and a lot of collaboration. We are, since our early days of activity, we are firm instigators of cross-border collaboration. We've had the fortune of learning by doing with a lot of with a significant number of co-investors from different geographies. So we've had the chance of co-investing at first ticket and in follow-on rounds of portfolio companies with some of the key investors from Germany, from the UK, from Spain, from the US. And so there's multiple opportunities there. We've gone through dozens and dozens of rounds of funding with portfolio companies. And we've always co-invested. So we've never led or completed a round of financing as the single unique investor in that round of funding. It's not only a matter of financials, it's also a matter of bringing the best minds to the table to work with that founding team to optimize for success. There's always something missing in the early days of a startup. So if you work with an engineering co-founding team, people with highly technical, deep tech founders, they are probably missing some of the business acumen in terms of go-to-market, sales, growing the team, and so on. All teams need to hire and need to go about fundraising, and so they all need assistance. If you work with business founders or people from business or economy, typically there's a lot of help that those teams need in bringing in the right people as CTOs, VPs of engineering, chief scientists, and designing the best product roadmap over time. So to make sure that you actually can cope with those challenges and provide valuable support to those founding teams, one of the best ways is to share that challenge with other complementary investors and build a very solid board or a very solid task force to help lift off the ground and get to the next round.
And let me just take this moment to remember our guests that they can post questions on the chat. We'll talk about that later. So we've heard before that Portugal has a very high quality of engineering talent at a competitive cost, a high level of English language proficiency, especially when compared to other sovereign countries like Spain and Italy. And we also said that Portuguese startups go global from day one, since there's a limited local market. However, we still lack founders turned angel investors, probably given the limited exits we've seen until now. This is important because we know that success breeds success, and without the steady stream of companies launching, winning, and exiting, there is no healthy pipeline of talent or available capital to build the next generation of breakout companies. Is that our main challenge? And what do you think the next generation of entrepreneurs will look like?
Well, I think we have a very high conviction about the new generation of entrepreneurs. We see even more highly qualified people forming new companies. There's a lot going on in Southern Europe beyond accelerator programs and incubators. There's a lot going on outside the sort of traditional circuits of university hackathons and accelerator demo days. And so we are very, very bullish on the next few years. I mean, if you look in hindsight, the 3-4 unicorns and the next 3-4 unicorns that will come out of Portugal or that can be considered Portuguese DNA companies are the results. I mean, that level of scale, regardless of valuation, that level of scale and becoming a lead or a category leader in their industries has required 10 years plus in the life of those companies. And back then, you only had a handful of companies being formed with product-led visions. If you look at what's happening today in the marketplace, the top of funnel it's an order of magnitude larger. So I think the likelihood of successfully seeing Iberia producing a larger number of large-scale successes in the next 5 to 10 years is very, very high. And where we see things changing is in the level of technology depth of those companies. We see a lot of work being done by founding teams in frontier technologies, in emerging technologies. And so I would say in the B2B sector, clearly everything around machine learning, data science, distributed protocols, there's a lot going on from a product perspective that I think will produce new levels of magnitude in terms of company formation. I think back to your point, we've actually seen a growing trend of successful founders, be it Portuguese or not, circling back to the ecosystem in multiple ways, either as advisors to funds, advisors to startups, angel investors, investing in funds. I mean, even in our case, and in other cases in other teams, but in our case, Carlos Silva, one of my partners at Faber, was co-founder of Seeders, and he's gone through the first years of forming that company, building a new category in the equity crowdfunding space in Europe. And so we see a bit of that already starting. There's obviously a challenge with liquidity. I think Portugal, same is true in Spain, has gone through, I think, a decade of scarce transactions. And for the type of companies where we invest, the exits are probably not going to be in Portugal over a long period of years, unfortunately. But the world is changing, and Europe has been accelerating over the last few years, and there's much more going on as of today. I mean, this semester we're completing 2 exits, one in the US, one in Portugal. We are seeing more and more appetite, both from corporates trying to look at potential acquisitions to accelerate their innovation agendas. We're also looking at successful startups, well-positioned in their spaces, in their market segments, being approached by large-scale companies from the US, from Asia, looking at potential acquisitions. And I think that's starting to accelerate across Europe. So it's not only in Portugal. So I'm hopeful. We are an optimistic team by design. So a bit of this may take longer than we wished. But I think the challenges are to continue to scale the ecosystem in its different facets over time. So as you grow in volume and quality of talent, you have to grow in volume and quality of capital, and you have to also continue to build professional infrastructure with universities, incubators, accelerators, and we urgently need to attract more volumes of talent to Portugal, because I mean, just to give you a sense, one curious data point is in terms of whatever the statistics are indexed to, you'll always find Portugal, due to its small absolute size, in the sort of the long tail of smaller equity deployments statistics, but it's actually topping the lists of open technology job opportunities in Europe. And so when you see that sort of paradox, I mean, you understand how urgent it is to continue to build successful education programs, successful investment programs, to continue to be a magnet for the best talents across Europe. And I think, if I may, one last comment to your question, one of the phenomena that we've seen, and I believe we are one of the reflections in Europe of that trend, is that there's usually sort of the first layer of investments when an ecosystem is being formed, and which happened sort of 10 years ago in Portugal, was multiple sort of small angel vehicles being formed with the help of some public instruments, also to 2-to-1 leverage instruments and tax breaks and so on. Then you see sort of public money flowing into the markets to sort of build the markets. Then sort of an additional layer of small VCs is formed from the private sector, usually generalists, and those will try to invest in whatever companies they feel are adequate, be it B2C, B2B, digital, non-digital, so it's sort of a widespread generalistic approach to investments. And those are usually the strategies deployed by teams, investment teams that have a more financial background in their DNA. And then you see a new layer on that stack, which is both specialized VCs, such as ourselves. That happens across Europe and more historically in the US. And also new programs by corporate venture capital arms. And so corporate VCs start to experiment first by sponsoring accelerator programs. Then they evolve onto trying to invest directly. They soon learn that investing at very early stage is very challenging. That implies having the risk profile to deal with high mortality rates and so forth. And so they tend to invest directly slightly later. And then eventually they end up investing in funds so that they can have an additional instrument to keep an active radar of potential opportunities, to have professional management of earlier stage portfolios, and then have sort of a right of first look, if you will, into potential opportunities for later stage, more mature direct investment opportunities. And I think that trends, that consolidation, that the maturing of the ecosystem, I think has been accelerating over the recent years in Portugal, and will continue to occur along those lines in the next few years.
Perfect. Thank you, Alexandre. Now, this has been an amazing conversation, and I thank you very much for that. However, we are running out of time, and I'll pick a few questions from the audience. So you've talked a little bit about sectors in industries that you consider to be on the right track, especially for a post-COVID economic rebound. Some of those examples are around data-centric startups. But we have a question here. If you can get us some more examples of sectors that you feel might be interesting, and if there are sectors in Portugal which are less represented than others. And this person gives some examples: AI, agrotech, renewable energy. And he also asks, and if so, what can or should be done to attract interest in these sectors?
Well, the thesis that we are applying to our recent funds, which is our second fund, as I explained, is mostly focused and fully focused on AI/data-driven startups. That's the result of our core belief around the types of companies that will be more resilient over time and more prepared to be at the epicenter of digital transformation. If you look at traditional business models across industries, machine learning, data science, data management will be a crucial engine of innovation and transformation in most industries. And so we very much explore opportunities in applied machine learning or applied artificial intelligence to the transformation of healthcare, for example. We have various investments in digital health, and we fundamentally believe that this level of technology and that deep tech will continue to change various instances of the healthcare industry. We are also looking at fintech and insurtech. I mean, whatever changes will continue to occur in the financial services industry. Please bear in mind that other VCs, for example, in the UK or in the Netherlands or in Germany or in France, will heavily invest in consumer-first value propositions, for example, in financial services. We are more curious and more interested in the B2B enterprise platforms that will enable a new generation of financial services business models. And that is exactly the same that we're looking at when we look at, for example, agrotech, or from farm to table, from production to and precision farming and predictive analytics and prescriptive analytics to intelligent automation of logistics and fulfillment value chains, and then onto retail, how you optimize distribution channels and omni-channel experiences. There's a lot of deep tech which will continue to invade those value chains and fully transform, because the order of magnitude of economic impact of applying this type of technology can be dramatic, and the level of intelligence that can be spread across organizations and industries as a whole is also dramatic vis-a-vis the traditional way of doing. So when you apply those expectations around some key verticals like agrotech and retail, or fintech, digital health, mobility, I think there's industry 4.0 or 5.0, so automation, robotic process automation, industry automation, what we call sort of the intelligent enterprise across industries, is clearly what drives our interests in terms of motivation, where we see a clear opportunity. I would encourage the audience to go out and check Bessemer's Cloud Index. Bessemer Venture Partners is one of the top historical VC firms from the US. They are a reference for decades, and they've set up an emerging cloud index of cloud-based successful technology companies. And you can easily see how that index of cloud companies consistently outperforms all other indexes, be it the NASDAQ or the S&P index. And you check out the sort of the volatility of markets, and that index always outperforms all other indexes. that has to do with how the industries are being transformed. So it's, if you think 10 years from now, would you guess whatever industry you choose, will you have a higher degree of technology or a lower degree of technology? I think the answer is evidence. Machine learning and data-driven technologies are at the epicenter of that accelerated change. And when we look at Portugal and Spain, there's obviously a correlation between the most advanced scientific work being done in the region and the density of types of companies in the market. We have strong skills, not talking about absolute size of those industries, but we have relevant skills in healthcare. We have relevant skills and relevant plays in manufacturing. We have relevant plays in mobility. We have historically sophisticated financial services sector. We have some concentration of types of manufacturers and industries in Portugal, which in some cases are part of the top group of world-class companies in their industries. And so if you think about how AI-driven startups have to access data sets, experiment their models, pilot their technologies, they will foster collaborations with those types of industries. And so they will go to market through those industries first. And that's how they will then scale to larger markets out there.
Perfect. Amazing answer, Alexandre, and great question. Thank you for asking it. I think we have time for probably one more question. Let's try to make it two. We still have two on the chat. So the first one is if there is, or if you know, if there is any strategy or commitment on the European level to make European tech hubs more closely together to compete on a global scale.
Well, I think it's fair to say, well, I don't have particular knowledge of one specific instrument or one specific policy or directive. We are, however, aware of multiple initiatives being launched at European level that will hopefully positively influence what happens in different geographies, to increase the level of collaboration and increase the level of consistency across hubs within a broader network of hubs in Europe. That's true for tax policies. That's true for thinking of stock options, for example. That's true in terms of investment in R&D and incentives on the scientific side. That's true at multiple levels of our economies and societies. And so I think there's a clear effort at European level to push for certain areas. When you think of two streams or two tracks of change over the next decades, at least that's our point of view. We may be proven wrong, but there's clearly one clear stream of intelligence-led transformation, AI, machine learning, and data science. And then there's also that will continue to accelerate in terms of digital transformation of different industries. And there's clearly another track on how these emerging technologies can also work towards the benefits and the long-term impact, for example, in climate change and climate action. And so those fronts are clearly also a reflection not only of how entrepreneurship can serve as an engine of positive change, but also how those areas are being the ones that are clearly being prioritized at European level to try and make Europe work closer together across different geographies.
Yes, definitely. And I would just add that you have the European Innovation Council that I think have a lot of initiatives about that. So the person can also search. I don't know all about this initiative, but I know they are it's related to this, and they try to make a more cohesive strategy. So time just for one more question. The Mario Balsa would like to ask Alexandre, what does he think about crowdfunding? So what do you think about crowdfunding? And more specifically, how does a VC firm or angel investor evaluate / handles a cap table of crowdfunded startups? Is that a deal breaker?
Well, that's also a great question, and thank you for that. I mean, we obviously have a biased opinion on that matter because we have been early supporters of seeders in this crowdfunding space. We see crowdfunding as a very interesting trend in terms of equity crowdfunding because it basically allows for widespread access to this asset class for individual investors, and it's basically a marketplace. And so if you apply the marketplace dynamics to fundraising and equity financing of startups and entrepreneurial projects, you're basically defining equity crowdfunding. Now, the way you do equity crowdfunding can be very different from player to player, just like there are differences across VC firms or private equity firms. And one of the positive differentiators of seeders vis-a-vis other players in the market is that you don't, I mean, if you have 200 people participating in a funding round, those 200 individuals are actually aggregated under one single special vehicle, which is a nominee structure managed by seeders, and seeders represents those 200 investors on behalf of them in the cap table of a startup. So other players don't work that way. So you have, as a founder, you have to choose wisely. Now, ourselves as a VC firm, we have led rounds alongside seeder as investors. We have joined rounds alongside seeders investors. And we just, I mean, very simply put, we just see equity crowdfunding as an interesting amplifier of access to potential startups and to potential investors. It's also sort of a gradually technology-based way of pooling investors to participate in funding rounds. And I think time will come, but I think it's that the industry of crowdfunding, it will continue to mature. And we actually believe that it will become more mainstream as regulation and local frameworks get more acquainted with the industry.
Thank you, Alexandre. Great answer. Thank you very much for this conversation. I really appreciated it. It was quite interesting, and I feel that I've learned a lot. So thank you very much.
Mario, thank you. Thank you to the audience, and again for having me. It was a pleasure. Happy to continue the discussion offline. So whoever is interested in getting in touch, please find me on LinkedIn or use my email, alex@faber.vc. Happy to continue the chat.
Yeah,
thank you very
much, Mario and Alexandre. We have recorded the session, so I'll send the recording to everybody and to the people who could not attend. And we had a comment, what a masterclass. So I think it was. I really enjoyed it very much.
We'll have to tweet that one. Thank you.
Okay.
No, thank you so much for the invitation.
You're welcome, Alexandre. Thank you, Alexandre. Thank you, Arnold, and thank you everyone for attending today. I expect it was as productive for you as it was for me, and I hope to see you all on Friday at 10 a.m. for the last conversation of the series. Thank you very much, and stay safe.
Thank you.